Here are the past picks now of David Burrows, president of Barometer Capital Management. June 28th of 2011, you selected a Starbucks at $39.25. It's up 35% since then, but you probably had a bigger gain than that. You only just sold this in the last couple of weeks, right?
Yeah, as things started to get difficult market-wise, there was obviously deterioration taking place underneath the market in some of the industrial sectors. Sooner or later, it comes back and gets the leading stocks. We run stop losses on our positions, and so we've come out of, I think it's all of the position now, sort of in the mid-50s. It's a great company, and it's one I'd like to own again. We feel that it's time to have a little bit more defense in the portfolios, and if you look today, a number of the big leading stocks, growth stocks over the last year have started to come in a little bit.
Did you get stopped out, or did you actually just make a decision?
No, we run stops. We stay in positions as long as they work. We find that if you make 20 investments you're trying to buy improving situations, 4 or 5 work out way better than you thought. 7 or 8 are pretty good, and a bunch don't work. If you use stop losses, you can stay in the ones that work as long as they work. And then when the time comes, you give a little up off the top and you go to the sidelines. People tend to do the opposite. They take their profits too early, and they hold on to the losing positions too long, and you just don't make money doing that.
Makes sense. Hard to do, though, for the average Joe, it seems. Magna, maybe for me. Magna, 51.41, that's where that was trading. Down by 17%. When did you get out, and did you make any money on this call?
Well, I have to admit, we've owned this twice in that period of time. We owned it at that time and came out as the market got difficult last summer. Our view was that there was some strength in the auto sector, again, this past fall, as the unit demand was going up. We bought a couple of parts companies. Magna was one of them. We've since been stopped out of it again. While I think that demand for autos is pretty strong, for some reason the auto parts companies are doing well, partly because they are economically sensitive. So that was an 0 for 2 over the course of the year. I think it's a wonderful company. They've grown market share, and there will be an opportunity to make money. It's just not the type of company that the market is willing to pay for right now.
How about Precision Castparts, trading just under $160 a share? This one's up by 5%. You're out of this one as well. How do you do on Precision?
Yeah, we made money in Precision Castparts. This was an attempt to focus on the companies that benefited from the ramp in production of new planes from Boeing and others. Again, I think that when you look at the kind of market that we're in, industrials probably are not the best place to be. You had a couple of $1 trillion in stimulus and monetary policy thrown at the market. We got 2% plus and a bit of GDP growth. That's very tepid. And so the market, looking forward 12 to 14 months at this point, just does not appear to be willing to pay for things that are highly economically sensitive.
But a good-looking chart, and as you said, you made some money on the Precision Castparts. Along with that one, Magna and Starbucks, those are the past picks of David Burrows. We'll get back to the phone lines and the emails and tweets right after this. The topic is North American large caps. Stay tuned. We'll see you after the break.